Greetings, financial enthusiasts. Welcome back to House Lux Estate, your #1 source for achieving financial freedom. Today, we're embarking on an enlightening journey, exploring the realm of emergency funds. You might be wondering, what exactly is an emergency fund? Well, it's a financial safety net designed to cover unexpected expenses or financial emergencies. But why is it so important, you ask? In a volatile economy, it's the lifeline that keeps you afloat, preventing a financial crisis from turning into a financial catastrophe. It's the buffer that ensures you can navigate the stormy seas of economic uncertainty without capsizing. And how do you build one? That's exactly what we're going to discuss today. We'll be providing you with practical strategies and tips, guiding you step by step on the path to building a robust emergency fund. So buckle up as we dive into the world of emergency funds. First off, let's demystify what an emergency fund actually is. Imagine you're sailing on a calm sea. Your emergency fund is like the lifeboat on your ship. You hope you'll never have to use it, but it's there, ready to save you if a storm hits. Similarly, an emergency fund is a financial lifeboat designed to keep you afloat during the unexpected storms of life. An emergency fund is essentially a stash of money that you squirrel away, separate from your regular savings or checking accounts. This isn't your vacation fund or your new gadget fund. It's a dedicated buffer designed to cover the financial surprises that life can, and often does, throw your way. Think of it as your financial safety net. What kind of surprises are we talking about? Well, these could be anything from an unexpected job loss, a sudden illness, an urgent home repair, or even a global pandemic. These are situations that can come out of the blue and have a significant impact on your financial stability. The key to a successful emergency fund is that it needs to be easily accessible. This isn't money that should be locked away in a long-term investment or tied up in real estate. It should be in a form that can be quickly and easily converted to cash, without penalties or a long waiting period. Now, how big should this fund be? Financial experts typically recommend having enough in your emergency fund to cover 3 to 6 months' worth of living expenses. Why such a large amount? Because that's approximately how long it can take to find a new job if you lose your current one. Remember, this isn't about predicting the future or living in fear of what might happen. It's about being prepared and having a plan. Because when life throws a curveball, you don't want to be scrambling for solutions. Now that we've defined what an emergency fund is, let's explore why it's important. You may be asking, why is an emergency fund so important? Well, let's dive into some reasons why this financial safety net is crucial. Consider this. Life is full of uncertainties. We cannot predict when a costly car repair might pop up or when a sudden medical emergency might occur. An emergency fund is there to cushion the blow of these unexpected expenses. It's like a financial shock absorber, enabling you to navigate through these sudden, unforeseen costs without plunging into debt. Now, imagine you lose your job. As unfortunate as it is, it's a reality many people face, especially in a volatile economy. Your regular income stream stops, but the bills don't. Here's where an emergency fund comes into play. It acts as a temporary lifeline, giving you the financial breathing room to focus on finding a new job without the added stress of worrying about how to pay your bills. Health emergencies are another area where an emergency fund proves its worth. Medical expenses can be exorbitant, and even with insurance, you might find yourself facing hefty bills. An emergency fund can help you tackle these costs without resorting to loans or credit cards, which only compound the problem with interest charges. And let's not forget about the psychological benefits. Having an emergency fund provides peace of mind. It's comforting to know that you have a financial buffer to fall back on in times of need. It reduces stress, knowing that you're prepared for life's curveballs. In essence, an emergency fund is your financial bodyguard, standing ready to protect you from unexpected financial hits. It's a buffer between you and the unpredictable nature of life. It's more than just a bank account. It's a form of financial security, a tool that allows you to handle life's ups and downs with a bit more grace and a lot less stress. Clearly, an emergency fund is not just a luxury, but a necessity. Now let's discuss how to build one. So, how does one go about building an emergency fund? The first step is to set a goal. How much do you want to save in your emergency fund? A good rule of thumb is to aim for 3 to 6 months' worth of living expenses. This may seem like a daunting figure at first, but remember, Rome wasn't built in a day. The key here is consistency and patience. Every little bit that you save brings you one step closer to your goal. Next up is budgeting. The word budget might sound restricting, like a financial diet, but think of it more like a spending plan. It's about making sure your money is going where it needs to and not just trickling away. Start by identifying your income sources and expenses, then determine how much you can realistically set aside for your emergency fund each month. Now, let's talk about automated savings. This is one of the most efficient ways to build an emergency fund. It's like the old saying goes, out of sight, out of mind. Set up a direct deposit from your paycheck into your emergency fund. This way, the money goes straight into savings before you even have a chance to spend it. But where should you store this fund? The ideal place for an emergency fund is somewhere easily accessible, but not too accessible that you'll be tempted to dip into it for non-emergencies. Consider a high-yield savings account or a money market account. These types of accounts often offer higher interest rates than traditional savings accounts, helping your money grow even more. And finally, remember, this is your emergency fund. It's not for vacations, shopping sprees, or the latest tech gadget. It's for real emergencies, unexpected medical bills, car repairs, or job loss. It's your financial safety net, there to catch you when life throws you a curveball. Building an emergency fund is not a sprint. It's a marathon. It requires discipline, commitment, and time. But once you've built it, it provides peace of mind and financial security. It's a buffer between you and life's many uncertainties. With these steps, you're well on your way to building a robust emergency fund. Let's quickly recap what we've learned today. We started off by defining what an emergency fund is, a financial safety net set aside for unexpected expenses. This isn't your holiday fund or your new gadget fund. It's your rainy day fund, your just-in-case stash. We then moved on to discuss the importance of having an emergency fund. In a volatile economy where financial stability can be as unpredictable as the weather, having an emergency fund acts as an umbrella, shielding you from the storm of unexpected costs. It provides a cushion, so if you lose your job, face a medical emergency, or encounter a large, unforeseen expense, you're covered. It's peace of mind in a world of uncertainty. Next, we explored how to build your emergency fund. We discussed setting a goal, usually 3 to 6 months worth of living expenses. We emphasized the importance of starting small, setting aside what you can, and gradually increasing your contributions. We also touched on the importance of keeping your emergency fund in a separate, easily accessible account to resist the temptation of dipping into it for non-emergencies. We also highlighted the significance of consistency. Just like building a house, brick by brick, building an emergency fund requires regular, consistent contributions. It's not about how much you earn, but rather how much you save and how consistently you do so. In conclusion, an emergency fund is not a luxury, it's a necessity. It's a financial lifeline that can be the difference between weathering a financial storm and being swept away by it. It's not just about the money, it's about the freedom it provides. The freedom to make choices, the freedom to take risks, and the freedom to sleep peacefully at night knowing that you're prepared for whatever life throws your way. Remember, financial security is a journey, not a destination. Building an emergency fund is a significant milestone on that journey. It's a step towards taking control of your financial future, towards peace of mind, and towards financial freedom. Thank you for joining House Lux Estate on this journey. We hope that our insights have shed light on the importance of an emergency fund and have provided you with the tools to start building your own. Don't forget to subscribe for more financial tips and tricks. Until next time, stay financially savvy.